We mentioned coins, so let's move now to another big story this morning. That is Coinbase filing its S-1 to go public via a direct listing on the Nasdaq. Some of the highlights we mentioned right at the top. $1.28 billion in revenue in fiscal 2020. The company is profitable. They have 43 million verified users. A very interesting read here on an expected filing from the company. But interesting, Julie, to see a company with $322 million in net income in the most recent fiscal year coming public. And I was thinking this morning, we have all these SPACs, and the SPACs are allowed to make all these wild forward-looking projections because they have different rules. Now, Coinbase can't do that in their S-1. This is actually a company I would like to hear about their 4 or 5 year plan. I mean, I know the financials are good, looking back for them, but I want to know what Brian Armstrong is thinking for the next 5 years. I don't really want to know what pre-revenue SPAC du jour is thinking for the next 5 years. But, such is the world as the SEC has given it to us.
Yeah, when the cornerstone of your business are extremely volatile assets, how do you then project? I mean, he's got to have a target, right, for Bitcoin, say, and the implications for his business if it goes up. I believe Coinbase, Myles, don't they also hold Bitcoin themselves? They don't just, of course, allow the trading of it, but isn't there, I thought I saw something this morning that in the filing they also talk about holding Bitcoin?
Well, they have custody for their customers, so they have about $90 billion of that, but I don't know if there's. I guess you're saying like a MicroStrategy type situation where they have some of their capital on the balance sheet. That I do not know, based on my cursory read of the filing I've done so far.
Yeah, we're going to have to keep digging through here, but I mean, what's also interesting implied in the fact that they're doing the direct listing, right, is that they don't need to raise capital, and rather that insiders want to cash out of the holding that they have in the company, which is also sort of an interesting layer on this. And even though, and also that they eschewed a SPAC, for example, right? That these companies that want to come public right now have this suite of 3 options that they can take advantage of in the market right now, and so. It's kind of interesting that they chose this particular path at this particular time, at a time when, they could have maybe gained a little more capital in different ways for the business itself. So that implies they feel they don't need it.
What I'm interested in here too is when Coinbase does in fact come to market, do you see, or even before they do you see a rotation out of Square and out of PayPal? Because for the most part, outside of investing, let's say in an ARK or Bitcoin itself or another crypto, you have not really had that pure play investment to play the trading and the frenzied activity we often see in cryptocurrency. If you own shares in Coinbase, do you also need to own shares in Square, in PayPal? It's going to be an interesting dynamic, I think.
Yeah, and so just to go back, and I think Sozzi, that raises the question too of how. What does each of these companies serve? Where do they fit within this Bitcoin derivative play, which I think a lot of people are interested in rather than owning the asset itself. And Julie, just to your question, Coinbase in here, they say that through their history, 96% of their net revenue has been generated from transaction revenue. I take that to mean they are not holding Bitcoin and marking those returns up on their balance sheet or on their income statement as revenue. So I see them as being a market maker in Bitcoin. They are in cryptocurrency. They kind of are what they say they are. They run a trading platform and they have wallet storage, and that's how they make their money. They're not buying tons of crypto and then saying, oh, now we're worth X because the crypto went up, which is an interesting dichotomy when you compare it to what we've seen in some other of those businesses.